7 minutes past 3. Now, markets in the US are once again heading to new highs, with the Nasdaq crossing the 4,000 mark for the first time since the end of the dot-com bubble back in 2000. Last week, you won't remember, the Dow closed above 16,000 for the first time ever, and the Standard & Poor's 500 closed above 1,800, another first. Let's go live to New York and our business correspondent Victoria Fritz. Now, of course, these are markets and, of course, we will see fluctuations. But generally, Victoria, does this suggest a positive direction of travel in terms of the way the US economy is going?
Well, yes, it does. I mean, the rally in equities is actually sort of almost 5 years long, really, this bull market. And yes, recovery is a part of that story. But actually, the US economy, its recovery has been quite anemic, in fact. And when you look to emerging markets, which has really boosted a lot of the growth, the bottom line for a lot of US multinationals, that is now slowing. So a lot of people are now thinking, perhaps we might be seeing, the beginning of the end. We've had a bull market for such a long time now. And that US stimulus, that economic stimulus, $85 billion worth pumped into the economy every single month, that will start to fall back in the coming months. And so at some point we will see these markets start to fall, but at the moment we're seeing what's known as a Santa Claus rally all the way to Christmas.
And what do you make of the Nasdaq one? I mean, is this a real sort of solid sense of tech being back again?
Well, actually, yes, it is tech-weighted, but we're seeing it in all of the markets. And in fact, you were saying that, it's crossed that 4,000 barrier. In fact, if you look at it adjusted for inflation, a lot of these markets, they're nearing that peak. But when you come to the Nasdaq and the tech stocks, the actual nominal peak, let alone the inflation peak, was over 5,000. So that was back in March 2000. So we're a long way off what could be seen as another bubble, another tech bubble, despite those ridiculous valuations we've seen from Facebook.